Okay, well, our next speaker is the Chief Executive and Chairman of Tower Resources, the AIM-listed oil and gas company focused on Africa. It is Jeremy Asher, who earlier this month subscribed to many shares in the business to fund near-term working capital and to progress the work on the company's hopefully lucrative licenses. In the last conversation I had with Jeremy, he quoted, "The best time to buy is when there is blood in the streets, even if it's your own." A very warm welcome to you, Jeremy, and hopefully there's not too much blood in the streets.
Well, thank you, Sarah. No blood in the streets today, I'm happy to say. Thank you for inviting me to come and speak today and to talk about the oil and gas sector and Tower Resources in particular. We believe that the oil and gas sector is one of the backbones of the global economy, and we believe it's going to remain so for quite some time to come, whatever the IEA says. The fact is that we're all trying to see carbon emissions reduced globally and renewables increased in the energy mix, but we believe that also requires stable supplies of oil and growing supplies of natural gas to make these numbers work. And this is especially true in Africa. In fact, Adam was talking about this in the South African context, and also other developing nations where CO2 emissions are anyway very low at present, but more importantly, where current energy production is both inefficient and simply not sufficient to meet demand. And this is a great impediment to economic growth and prosperity, as also it's not very environmentally friendly either. So we're convinced that the world needs more short cycle oil and gas production, and also more safe and economic long-term oil and gas reserves, simply to mitigate the long-term decline of existing reservoirs. And our mission, it's to help deliver this oil and gas. Now, as you can see on this slide 3, we have a broad asset portfolio in 3 countries, Cameroon, Namibia, and South Africa, and those encompass a different type of assets with different types of risk and timing. In Cameroon, our Thali license contains an existing discovery of oil on the Njonji structure, which we want to get into production as quickly as we can. And it also contains a significant amount of additional prospective resources, which we want to explore once we get Njonji producing. So I'll talk about that first and at some length. But then in Namibia and South Africa, where Total, Shell, and Gulf have recently made a number of high-profile discoveries, we also have high-impact exploration licenses in deeper water, which take longer and cost more to explore, but which also have the potential for even greater rewards. And I'll talk about those opportunities briefly as well. But as I'll also explain as we talk about Cameroon, exploration doesn't always have to be so risky. Once we have Njonji in production, we can also continue to explore in that same Thali license area for some period of time with very little risk. If we go to the next slide, this describes the Thali block, and it's a busy slide, which I'm not going to talk through in detail. We operate the block with 100% interest, and you can find these slides on the website and also a much more detailed presentation by my colleague, Duncan Rushworth, on all the details of the structures. But I'd like to draw your attention to 2 key points on this slide. The first is that we have some 25 million barrels of 2C contingent oil resources in the Njonji structure. That's the structure you can see towards the bottom of the map. There's oil in the reservoirs which are connected to the 2 discovery wells, which were already drilled by Total over a decade ago. We also believe there's a similar amount of potential prospective resources in the same structure, and that's in reservoirs which have not yet encountered a drill bit. The second key point is that there are a large number of other structures on the license area with a lot of additional volume, which have not yet been drilled. And you can see that both from the table and the map. But I'll move on. If we go to the next slide, you'll see here that there's a schematic on the left-hand side, which tries to explain what's going on and why the 2 discovery wells have not encountered all of the reservoirs. On the right, you can see the discovery well that intersected 3 of the reservoirs at the very edge of the structure. But we believe that there's several more reservoirs that are that are also present in the structure. And if you look at the right-hand well, I mean the left-hand well, you'll see that this one is the other side of a fault which sealed it off from those reservoirs also. So this is why our plan is to drill the current well in Tranche 3 near the crest of the structure. And if we go to the next slide, the idea is to be able to test all those reservoirs, both the ones that are in contact with the earlier wells and the ones that aren't, but also to see how they flow. But then our objective is to deviate and drill 3 further follow-on wells from that same location to different parts of the structure before commencing production from all 4 wells, which we hope will happen in early 2026. If we go on to slide 7, this slide discusses the economics. The economics are very attractive, and there are reasons for that. One reason is because we're operating in the shallow water, which is naturally advantageous. You've got relatively low costs, much simpler logistics, but we also have very attractive economics on the production sharing contract, and we're also benefiting from current favorable oil prices. I'm not going to go through this slide line by line, and the economics are simplified anyway, but I just want to draw attention to a few things. The first is that at 8,000 barrels a day of production with $75 oil prices, we generate gross revenue of over $200 million per year, of which 60% is available as cost recovery for the contractor before the profit sharing, which is already very substantial. So this means that not only do we recover the costs very quickly, but we can also recover the costs of further exploration in the surrounding structures in the license area for a period of 4 to 6 years, the remaining exploration periods under the license. We can recover the cost of those wells, even unsuccessful ones, and also the associated infrastructure too. So this is why I mentioned earlier that exploration doesn't always have to be risky. In fact, the Nchonji prospect alone will be able to return its capital and make substantial profits, even if the additional resources we hope exist don't materialize, and especially if they do, then the returns could be substantially greater than what you even see here. So you might ask, what's the catch? Why is it already taken so long to get this project into production? It's a good question and goes to the heart of how the sector has changed over the past few years. Although this project can earn a lot of money, it's still fairly small in oil industry terms, and it's the kind of project which only independents would normally be interested in taking on. Provided the current appraisal well shows us what we expect we should be able to get debt financing for the rest of the development, or most of it, but we do need some higher risk capital now for the appraisal well. In the past, independents like us would normally share the project with like-minded independents, with partners, and we'd finance any amount we needed to fund ourselves by issuing shares on AIM. This was what AIM was originally created for, and this was our plan in 2017 and 2018. But by late 2018, the institutions had been most active in buying and holding the shares of small cap oil and gas companies on AIM were already withdrawing from the market, partly because conventional wisdom moved against oil and gas in general and against illiquid investments, and partly it reflected the broader withdrawal of pension fund portfolios from UK equities, which has been well publicized and has affected the whole stock market, but especially the small cap end of AIM. This has resulted in lower valuations, much less appetite for new share issues from small cap oil and gas companies on AIM. And so companies without production and without cash flow have really been limited to raising modest amounts of working capital. And shareholders expect companies like us to raise the larger funds for development from other companies or from investors at the asset level, which is understandable, but also sometimes easier said than done. Even companies with cash flow also have investors who want them to return money to them in dividends and share buybacks. So for them to co-invest with us in a new project like this, but also in a new country, this becomes a strategic decision for them. It requires thought, it requires analysis, it requires due diligence. In other words, it takes time, and different amounts of time for different companies depending on their circumstances. So right now we're in discussions regarding up to $15 million of asset level financing with several companies, and we're hoping to conclude those discussions not as soon as we can, because we're still planning to start drilling in the fourth quarter. Even our most committed investors, though, worry about when we will get this done, and personally I'm very confident about it. But I can't say more about the details of our commercial discussions in public, because those negotiations are still going on, and it'd be like playing cards with all our cards face up on the table, which nobody does. So that's why getting the financing in place for the appraisal well is time consuming. And also everything that involves getting approvals and so forth takes time in our industry, and we realize this is a risk for investors. If we turn to slide 8, I'll talk about Namibia briefly. Namibia is a different kind of risk. It's pure exploration risk. We have over 23,000 kilometers in the Walvis Basin. We own 80% and operate this license. In the Walvis Basin, we're somewhat to the north of the Orange Basin, where Shell and Total and Galp have made their recent discoveries. But we know that the Walvis Basin also has source rocks and a working petroleum system that's already shown up in the wells that have already been drilled there in the last few years. And we know that we're in good company with Exxon both to the north and to the south, and also Chevron to the south, and other companies nearby. Our basin modeling has shown us where the oil and gas kitchens are mature and the kind of volumes they should have expelled over the long geological timeframes since they reached maturity. And if we look at the next slide, you can see a little bit of that also. The geological analysis has also shown us where the possible migration paths for the oil lie, and we've compared those with the oil seeps that we can see over the area using satellite images. And at the end of last year, we confirmed that these match up very well. There's a detailed presentation of this technical work from October 2023, which you can also find on our website. So we're now completing the prioritization of the most interesting of the leads along those migration paths prior to choosing the most promising areas in which to acquire more 3D seismic data. We already know from our previous work on the license area that we have some giant, and I mean really giant, anticlines at the end of some of those migration paths. But we're also now seeing some giant stratigraphic traps, which in many ways we're even more interested in along those paths before you reach the giant anticlines. Once we've completed this work, I expect we'll be looking for a partner to fund the 3D seismic data acquisition itself. If we turn to slide 10, in South Africa, we also have a high impact exploration license, which we hold in a 50-50 joint venture with the operator, which is New Age. Here, we're nestled between Total's blocks to the west and Shell's blocks to the east, and the deep water section of the license, as you can see in the chart, juts out into the Utaniqua Basin, which is where Total's Bulpada and Leopard discoveries have been made. The operators identified a giant lead here with separate potential reservoir layers in the deep water slope and in the basin floor fan. The next step here remains, as in Namibia, to acquire additional 3D seismic data over the lead. And this process, well, it's been slowed down somewhat by the new petroleum legislation being enacted. But it now looks like this process is moving forward again, and we are currently in advanced discussions with a third party to finance that work at present. So to conclude on slide 11, which I already showed you, as you can see, we have 3 very interesting assets, but with different timing and risk profiles, but all of them offer great rewards. Our priority in the short term is Cameroon, since this is the quickest and surest route to production and cash flow, and that changes everything from an investor's perspective. But once we have that, the longer term prospects, both in Cameroon and in Namibia and South Africa, are also enormous. Tower's the type of oil and gas company which AIM was originally intended to finance with growth capital. Today, AIM is not such an easy place for pre-revenue companies. And this creates some extra risk for investors, as there are no longer so many institutions that are there to keep providing extra capital if private investors don't want to do it. And oil and gas is also a sector with naturally long timeframes. It takes time to get things agreed, time to get them approved, and then it takes more time to actually get things done. But just as there may be extra risks, there are also exceptional rewards for investors who can understand the sector and are comfortable with it. I'll finish by just repeating that there's a lot more technical information on our website, and SB Angel also produced a detailed analyst's report in December, which you can also find on SB Angel's website as well as on our own. Thank you very much.
Thank you. Thank you very much indeed, Jeremy. You know, it's always marginally terrifying when one becomes known as a veteran of a particular industry. However, you do have that moniker, as it were. So I'm just wondering, just how well connected are you? You talk about Cameroon. So does the company have a direct line to the Prime Minister of Cameroon, for example?
Well, yes. In fact, we've had a huge amount of support from the government. Um, everything in Cameroon is there's a very strong rule of law, and everything is done in a very systematic way. So you've got the National Oil Company also involved in everything that we do, the ministry, of course, and they have a strong technical team. But the Prime Minister takes a very strong personal interest in what we're doing, and ultimately everything has to be approved also by the Office of the President. So you've got a strong political support system, and there's a very strong desire on the part of Cameroon to see new players coming into the sector and for production to increase again, because production in Cameroon hit a peak of about 160,000 barrels a day a decade or so ago, and it's now merely about half that.
So I'm just wondering, so you've got the political support there. What is the biggest challenge to the juiciest part of your portfolio? Is it getting rigs, getting extensions to initial exploration licenses, or, as you've explained very gently, about fundraising and the different dynamics within AIM?
I think that for us, it's been different things at different times. Um, the rig market was extremely tight after the Ukraine invasion. The reason for this was simply because Aramco made the decision to massively increase the number of jackup rigs that it was using in its shallow water production. And they took most of the available rigs straight out of the market. So whereas the deep water drill ship market improved gradually, the jackup rig became very, very tight very, very quickly in 2022-23. This year, 2024, it's actually becoming a bit easier because some of those rigs have been released from the Middle East. So they're finding their way back to West Africa, and rigs is no longer the issue, even though the rig that we already have contracted to use with Bohr is currently delayed because of this is one of these things that happens in the industry. You just get delays to programs. So rig's not so much the worry now. Having the money and time for when the rig's finally ready, that is very important. But there's a bit of chicken and egg with these things, because when you've got the rig deadline right on top of you, everyone's mind is concentrated. And then when it seems like you've got another few months, people say, oh, well, maybe I take. And, as I said, these are important decisions for the companies we're talking to, and we don't want to hurry them up. We want as much time as they need to make sure that we get the best proposals that are best thought out before we move forward. So it's different things at different times. And then when we've drilled this well, we'll still have to go through some approval processes before we do the next round of drilling, and there'll be procurement on long lead items. So there's always something.
Okay, so you and I have discussed this before, but the market cap seems so low relative to the expected value of the projects. And Dale asks, do we have an expected share price for the end of 2024?
Well, I'm not supposed to really talk about the share price, but what I try to do is to show what I think by my actions rather than my words, which is why I bought shares just a couple of weeks ago. But what I would say is that SP Angel have done quite a detailed analyst report, and the assumptions that they've made are all laid out in great detail. It's very transparent. And I think their target price was 0.12, which is an order of magnitude higher than where we are now. So what I would suggest is that if one's interested in where the share price could go, both in the short term and also in the longer term, take a look at SP Angel's analysis. It's quite interesting.
I will do. And we will do. Jeremy Asher, thank you very much. It is indeed a pleasure. And yes, Jeremy, that wasn't Jeremy's quote. Jeremy quoted somebody else's quote about there being blood on the streets. I could see that there were some comments coming in. So no, Jeremy wasn't taking credit for that quote, but it's a good quote nonetheless. Jeremy, thank you very much. Thank you.